Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. Tonight's topic is part two of a two-part series of managing multiple contracts. However, we took a quick poll before starting here, and several team members have suggested additional topics, and so we're going to sort of sprinkle in some topics that they'd like to see addressed along with our multiple contracts issue. First, of course, we have to get our standard disclaimer out of the way, so let's get straight away on with it. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. All right, without further ado, I think we've had about, let's get over to screen one here. For those of you that are new or visiting, of course, you can see this is our YM. This is one of the instruments we have in the room. YM, the Russell, NASDAQ, and crude are what we primarily trade. These are the indicators, bar colors, background colors, swings. We have a predictor on here which shows additional swing detail, which are these oval areas with a little bit of support and resistance areas. You can see here when you're going sideways that they all sort of cluster together above and below the top and bottom of the range, respectively. I am here in California, so this is all Pacific time. So if you're in another time zone, of course, you would just translate the times on my screen to your local time zone. We've had quite a dichotomy this week that I'd like to cover. Of course, this being Thursday night before the Memorial Day weekend, we're going into, getting ready to go into a long weekend. Of course, the markets are closed on Monday, Memorial Day here in the States. So we will not have any live room. There won't be any trading. We'll be back up first thing, of course, on Tuesday morning. But let me come over. Is everybody seeing this YM chart? Okay, everybody see YM? I'm scrolling back and forth. Excuse me. Cursor moving, just checking in, making sure that everybody sees everything. Testing audio. Is this thing on? Anybody hear me out there? Hello? Chart moving. Anybody out there? Hello? Just making sure everybody's awake. I wouldn't hear anything back. Hello? Anybody out there? Hello? All's looking good. All right, off we go. Off we go. So one of the questions that came in before we got started here was, let me just, and these are all good topics, so I'm going to kind of sprinkle them all together and then sort of mix in the multiple contract issue. One of them was want to make sure that the first trade was green, waiting for good entries and not jumping in too quickly, which I think is a topic for everybody, every trader. I don't want to say all the time, but especially in fast-moving markets, that's a timely topic. And then there was several questions regarding Band-Aids. Not only the topic of the Band-Aid itself, but more practically managing when markets come in and out of the Band-Aids, and so how to sort of manage and handle that. Now, before I get into anything, I'm going to start off like this, because a lot of what we're going to do as far as our trading throughout the course of the morning is going to depend on a number of factors. But one of the most important factors to figure out in the early market is what is the market doing from a trending or ranging perspective. Wouldn't we all agree that's an important thing to know? So let's take, I think this is Monday. Today's what, the 6th. Okay, so Monday was the 23rd, 4th, 5th. Yeah, 26th is today. Now, here we're going into the open of the market on Monday, and this is what we saw. So when you see a market in the pre-market session that looks like this, and this is really, really critical, and this is why I'm going to spend just a minute or two emphasizing this so we all are clear about this. What is the first thing we do when we load our chart in the morning? Number one, first thing. Of course, let's pretend you already got your cup of coffee, you know, your data source is connected, all manner of pre-market things to get ready are all done. Now you're getting ready to trade. What is the first thing we do? And we all need to get a regimen of discipline to do this. It's the number one thing I do when I get up and I start looking at charts. The number one thing. We all should just, every single one of you in here tonight should just type that in without even thinking about it. You should instantly know what to do, even if you don't do it. Which, of course, you should. Hence the importance of doing it first. The first thing you're going to do when it comes to this would be the most important thing. Draw lines. Good, Mindy. Who else we got in here? Carl G. Support and resistance. Good. Look for trending or in a range, says Kenneth. PW. Evaluate. Trending or not trending. Figure out where the highs and lows are. Draw some lines. Good, Peter. Good. So this is how easy this is. And we all know, and I'm going to use this throughout the course of this trading session and the other trading sessions. Okay? This is how important this is. We're going to take several lines. Okay, we see that pretty clearly in the immediate, just be right before. Here's the open. 6:30 Pacific is right in here. Okay, so this is about 10 minutes, 15 minutes in. You're looking at right now. But in the pre-market, you could have done this same exact thing. And I think just before the market opens, that's exactly what you do. I would have put a couple of lines here too. And then if you want, you could have another couple lines at the outermost swings of the pre-market session, which would look something more like this. Now, as long as we stay within these lines, this market is said to be what? If we go for the next 2 hours, or even all day, I don't know how long, we don't know when we get into the beginning of a trading day with the financial markets, we don't know what the market, we don't have a crystal ball, but if it stays within these lines, we can say that the market is what? I'm really going to go through this tonight, I mean in great detail, so that tomorrow morning and every session from now on out, it's in a trading range. It is deemed to be in a trading range. It's in the big box, in the bus, says Carl G. Yes. And so if you know ahead of time that a market, if it remains within the range, then you have to decide if you're going to trade the range or not. I know I've asked this question 1,000 times. I've said, how many of you like ranges and how many don't? I know most of you don't like ranges. I know that. However, if there was a way that you could try to work a little bit of range trading into your trading repertoire, it would give you more tools in your tool chest to deal with markets that look like this. Now let's go ahead and toggle throughout Monday and see what we see happen. Okay, here we're in this innermost range. And here are the lines for the swings above and below in the pre-market session. Okay, we're still bouncing in this range. By the way, before we see the end of this range, quick question. If you were going to trade this range, are you primarily, as your primary mode of entry, are you buying, B, support, taking profit at the tops? Are you S, selling or shorting the top, covering at the bottom, or are you trading both sides? And to save you a little time, I didn't ask the obvious question, is it tradable? It's over 20, 25 ticks. It is tradable. So I'll just knock that out of the way. It's right on sort of the fringe of tradability. You know, you wouldn't want it too much smaller than this, but this is kind of on the outer fringe of tradability. So are you B, buying the bottom as your primary mode of entry, S, selling or shorting the top, or B, trading both sides, buying the bottom, selling, reversing, shorting, buying the bottom, covering shorts, shorting the top, rolling over, covering, buying the bottom, cover. That's both. What say you, team? If you were going to trade this, what would you do? How would you approach it? And I think an equally important question is, how do you know? How do you know which side direction to trade? All right, good. Most of you said buy. I would, okay, some of you said not for me, I'm just going to wait. Okay, that's cool. Hey, you know, I want to be clear about something here, and this speaks to what Carl G asked earlier, which is, how do I make sure my first trade is green? So in the case of David D, who said, I'm not sure, I'm going to wait, you have essentially answered that first question. If you don't like ranges, if you get beat up in ranges and you're not good at them, you've tried them in sim and all manner of different ways, well then, and furthermore, if you find that you get chopped up and you take losses, well then the last thing you want to do 15 minutes into this trading session is go in here and get all whack-a-mole around, yes? And then you're digging out a hole the rest of the day. Isn't that the worst? Tell me that's not the worst. Starting off in the hole. Don't you hate that? I'll tell you, it doesn't happen very often to me, but it used to happen all the time. I'd get in there, I'd pull the trigger, first couple of trades, smacked about the head and shoulders. Then every trade is, you know, you're sweating because you want to get that money back. Oh, it's a total pain. Well, you know, I've had a lot of people ask me that question, Diane, and I've had a lot of Skype questions on this too. What turned things around? I'll tell you what it was, is I am hyper focused on the entry. Yeah, when I used to drive up to the city, remember San Francisco, I traded on that trading floor for a long time, and I would just get smacked about the head and shoulders, and every morning it was like sort of like Groundhog Day. You ever see that movie? You know, Groundhog Day, same thing happens the next day, only it changes just a little bit. Yeah, Groundhog Day was every day for me. I'd drive up into the city, I'd get everything all ready, market would open, I'd get all smacked around, I'd be in the hole, and the rest of the day was digging out of the hole. And what was happening was I was so anxious to make money that, you know, I sort of lost sight of what it took to really have a good entry. And you see this simple thing like putting lines on here and really sort of analyzing where support and resistance are and what the range is and whether I'm going to trade it. This little bit of work that we did for just a minute or two to get things ready to decide what we're going to do. See, I never used to do any of that. You know, I just go in. Of course, a lot of it was stocks. I wasn't really trading futures back then, and I didn't really have a good software or good plan. It was not structured like this. Now I am super structured. I am super disciplined. I do everything the same way every single day. I replicate. Now, some might call that boring. You know, you might say, well, don't you get bored doing the same thing all the time the same way? Well, you know, on the other hand, I have some structure that I follow, right? And the structure, to answer your question, Diane, provides that good results. So I went from unstructured, where I wasn't really following any kind of plan, and I was more haphazard on my entries. And what turned it around was I have some structure on the charts now, and I know I have a plan. I know what I'm going to do, how I'm going to approach it, and that doesn't change from day to day. The other thing that's nice is you should know going into each day what instrument you're going to trade. I'm not going to spend a lot of time on that. I've said that 1,000 times till the cows come home. You've got instrument selection is key. You've got to pick one or two of these puppies, even if it's ES. We have some ES traders in our room. Some of you know that, right? Does anybody here trade ES? Is GW in here? I don't think he's in here tonight. We have a few traders, and you can use YM as a proxy. I've said that several times. YM moves almost exactly like ES. You know, you can try ES. It doesn't move that fast. It doesn't. It's like YM if you made it into a turtle and it crawled slowly. That's what ES is. But anyway, back to this. So now that we have some structure, we know how we're handling this. Now back to the issue of whether you're buying or selling. You know, in my view, you're kind of going sideways, but the background is green and many of the bars are blue. So arguably, you're buying support here, right? Now, for those of you that said that you're trading both sides, there's a plus and a minus to that, and I'll just quickly say what that is. The plus side is that you're getting to effectively double your return of trading within the range. So unlike the buyer who is buying here, taking profits, so there's one trade. Buying here, taking profits, is the second trade. Buying here, taking profits, there's three. You know, you would have had six, right? 1, 2, 3, 4, 5, 6. So you double your trading inside. Now here's the other thing. When this came up here into here, for you shorties who were trading both sides, you know, you may have shorted this expecting a rollover and you got almost a full stop out, depending on how tight or loose your stops were here. For you both side traders, that's the risk. When it breaks out one direction or another, if this had tanked through the bottom and you had bought this, I mean, the only thing, there's two things that might have helped you not do that. At this point, you really didn't get a rollover, so it's possible you didn't short it. But if you did trade both sides, you probably got a pop right at the end, okay? So that's just one thing to keep in mind. For me personally, I would have bought support right in here. Now, before I advance any further, and by the way, we're at about 7:15, so we're 45 minutes into the trading session here. Is this, based on what you're seeing, is this a load the boat day, yes or no? Meaning multiple targets. Are we loading up for multiple targets? Yes or no? When you see a day that looks like this, is this where we're going for it? Is this where we're loading up for bear? You know, is this a 10-20 contract day? Okay, good. Everybody is saying no. Based on what I see now, no way, says Dennis. Good. This is not a load the boat day, okay? And this is speaking to the issue of multiple contracts. When I see this kind of thing, if I'm even going to trade it, I'm going to dip my toe very, very lightly. I'm only going to put a couple of contracts on here, and I'm going to, you know, I'm just going to scalp within here. I'm going to get in, I'm going to scalp it, get out, get in, scalp it, try to build a little bit of coin so I'm not just sitting there staring at the screen. Excuse me. So hold on, let me take a sip of tea here. Definitely not load the boat day. All right. Let's continue on. I don't want to spend the whole day on this instrument in this one day, but there was a lot of topics that I wanted to cover here before we move on. Okay, now the topic of Band-Aids. And this will be the last thing I'll say about addressing this issue right here. Generally speaking, and this isn't always true, but generally speaking, is it a good idea? Let me go back here, and this is the last thing I'll say, and then we're going to rip through this day and get into the next days of the week. Is it a good idea when you have a well-established, defined trading range to trade Band-Aids at the mid-band? Is that a good idea? Yes or no? Trading Band-Aids at the mid-band when the band is located somewhere at or close to the middle of the trading range, is that a good idea? Generally speaking, no. Right. The only exception to that, and it's pretty rare, is if you had a huge range. Okay. Let's say that this range was almost twice the size it is right here. So maybe the range was more like this. And it was you know, let's say it was crude oil or Russell or something, okay, and it's swinging way up here and it's hitting this, it's like 50, 60 tick ranges, way up, and it comes all the way back down here, and it's just ranging around real nice. And so what I'm saying is this. If you particularly traded both sides of these boxes, potentially you could be, filled short literally at the support level where you should be buying it, right? Now, granted, there's a little bit more upside to the top here. If you said, well, you could scalp that. Yeah, technically you could. There was a little bit of meat on that bone, but not much. Generally speaking, unless you have a huge range, trading the mid-band in a range is not a good idea. You really should be looking support and shorting the top. Or in a downtrend, of course, you're shorting the top. In an uptrend, you're buying the bottom because you're expecting trend continuation. So if you are coming out of a trend and you're consolidating and it was a big uptrend, then you're buying support, right? Because you're expecting a breakout to the top, like that. Okay, we addressed several topics. Did you get that, Mindy? We addressed several topics here. Number one, first thing we do is draw lines at support and resistance. Yes? Number two, we identify a range and we're staying in the range. We have to decide if we're trading the range. Number three, we decide based on the conditions, our primary mode of entrance. Buying bottoms, shorting tops, trading both sides. Generally speaking, mid-band trades in the middle of the range are not a good idea unless the range is huge. And if you're buying support and the trade comes up, then you're expecting some trend continuation. You can see the background is still green. Now the mid-band and all the bands are stair-stepping up. But at this point right here, at 7:20, 7:30 in the morning, so we've been trading almost an hour, have we changed trends from range to trending up or down, or are we still in the range? As of this point right here, are we still in the range? Yes or no? Are we still in the range, yes or no? Or are we trending? If you think we're trending, type in a T. Mindy, I'm glad I see a few of you typing in that the light bulb is going off. Sometimes it just takes a real simple explanation and the light bulbs go off for you. And that's what we're looking to do in these training sessions. We're really, the whole idea of these things is that we're kind of, you don't have the market shooting bars in your face. Still in the range. Good. Perfect. We all agreed in the pre-market session when we drew these lines, pretending we were in the pre-market on Monday, as long as it stay within the confines of these lines, we are range bound. So then you have to decide how you're going to trade it. Exactly. Kenneth said, and we're going to look at that, Kenneth. That happened on Tuesday and Wednesday in all the equity markets. Kenneth is saying this. He's saying the days that I tend to struggle the most are when I come in and we are at the extreme top or bottom of a huge move, either up or down, and I can't decide if it's going to continue a reverse course. We're going to look at that. That was Tuesday and Wednesday, big time. Yeah. I'll tell you what. Let me stop and speak to that for 1 second. And this is really hard to get over. This took me a long time to get over this. Is this whole notion of directional bias and trying to outthink the market early in the morning and anticipate what I think is going to happen. Let's move on and I'll address that. That's going to be another big topic I'm going to talk about. So here we're just trading in the upper ranges, right? Now it's went up, hit the top swing of the resistance, rolled over, checking this. Coming back down, breaking support, back in the lower range. Look at this here, 8:30. We're closing the room up now. This was your whole morning in the room right here. Was that. From here to here. It went a whole lot of nowhere. And I'm going to say this. If you don't want to trade ranges just because you just can't do it, you're not a range trader, and even though you see support and resistance, for some reason you just can't get in and you're not getting out in the right spots, well then you know what? Don't trade the ranges. This might be a day, all due respect to those of you who do not want to trade ranges, that you didn't take a trade all day on YM. Those will come. Those will happen. And I got news for you. You're going to get a lot more days like this coming in June and July and August. I'll tell you, last August, I wish I had taken the whole month off. It was horrible. Markets just went nowhere every day. Every day looked like this. And then the sad thing about it is this, is that, you know, you go in and you say to yourself, it's not going to be another, it can't. There has to be a run. So you are so numb to there not being any runs, you're not expecting it, and so next thing you know, the run comes and you miss it. Isn't that frustrating? That's the worst. All right, let's move on. I'm just telling you, this is a precursor. This week is a little bit of a precursor, and Monday in particular, to what might be coming with the summer months. Okay? I'm just giving you a heads up. I'm not trying to spoil or ruin it for you. But it's coming. I'm ready for it. It happens every year. I'm not worried about it either. And you shouldn't be either. We're going to be here and we're going to help you through it. All right, now here is Tuesday. So I left the lines on from Monday just for the heck of it, okay? So here is midnight on Monday going into Tuesday morning. Went all the way into midnight through the whole U.S. session, into the Asian session, and we're going into the European session here, and you're still in that stupid range. Isn't that amazing? Look how these lines held the whole time, all the way from Monday all the way over here. Unbelievable, huh? Now, what happens in the early stages of the European session right over here? Okay, you had this little section here, and then this is from 5:30 Pacific to 6:30 Pacific. This is about an hour before the U.S. trading session starts. You get this little burst up. So what is happening here? Now I'm going to circle back, Kenneth, and I'm going to address your issue because that's a very good one. I think that several people typed in and they said they agree that that's an issue. All right, here we are at 6:30 on Tuesday morning, and the market looks like this. So what are we thinking? How do we look at a market that's doing this and not try to outthink it? Let me help you with that. Let me help you how I change that. And I still fight this every morning, I'll be honest with you. I think it's natural human tendency. That's the tough thing about some things in trading, is that in some respects you're fighting what is your normal human tendency. The normal human tendency is that you should try to think about what's going on in the market and then predict in your own mind, well look, this thing has run up from all the way down here. You're up, what is this, 140 ticks? It's going to reverse. This can't keep going. So here's what we're going to do. I want every one of you to try this tomorrow and all of next week, particularly in the first hour of trading. No directional bias. We trade what we see. We trade what we see. We can't tell the market what to do. The market's going to do whatever it wants to do. Now, in the case of this here, you know, what was that guy? Was it Greenspan? One of those guys. Several traders have said this over the years. The market can remain irrational longer than we can possibly imagine. So what I'm saying is this. Just because the thing's run up 140 ticks off the bottom doesn't mean that it can't keep going. It could run another 140 ticks. Right? We don't know that. We can't expect a reversal until we see it. We can't impose our will on here and say, oh, you're going to flip and I'm going to start shorting you. That'd be ridiculous, right? The trend is up. We are buying. We are getting in here by hook or by crook. We're getting in. And we're going to ride that thing for as long as it goes, yes? Irrational exuberance. That's exactly right. That's exactly right. So this is really key. I've said this so many times over the years with so many traders I've lost count. But this is really critical to your success, and it takes time. It really does. You're fighting your natural human tendencies of looking at markets and having an opinion about it. You can't have an opinion. I mean, in this case here, you might have an opinion, and your opinion is, you know what? This market is going up. It's rallying, it's trending up, and I'm going to be buying until I am proven otherwise and the trend reverses. Yes? So I'm going to advance this chart slowly, and you're gonna. I want you to. So we're gonna type in B because we're buying. Yes. And wherever you see an entry point, I want you to type in a B. Okay. You ready? Now, before I do this, I'm going to give you a hint. I'm going to help you. Okay, I'm going to start with this. Here is 631 and 632. I remember this morning. Band-Aids would have painted right here. I remember this because I got in it. Band-Aids would have been painting. Everybody see this? Band-Aids 630, 631, 632. Band-Aids would have been painting right there. Now, you tell me this. Would you be nervous taking a buy in a box that's way up here like this? Would anybody be nervous doing that? In fact, some of you probably missed it. Yeah, of course you are. But look what happens. This is the next half hour. It ran from that box all the way up from 17,565 roughly all the way up here to 90 ticks straight up. You can't be afraid to let markets just do their thing. You got to let the markets do what they're going to do, and you have to observe what the markets are doing and react accordingly. You know, if you have a little trepidation and fear about getting in here, your risk really wasn't that much because at the moment in time this box drew, let's say hypothetically you put 2 on. If it popped up to here, you at least got a scalp. And when you got the scalp, you should have been saying to yourself, which I do, is, you know what? If it flips and stops me out and comes back by the midband, I'll be looking for another entry, and I can just simply take my initial stop down here, 12 ticks under the midband. Let's say you're filled here long, and you get a little scalper, and then you suck this up tight. So okay, I get stopped out on that second contract, no big deal. What are you going to do under this scenario? Well, of course, what would you do? You're going to look for a retrace and look to buy the midband. So when you frame this entry in that light, the fact that you were in the middle of a powerful uptrend that was all still moving, all the momentum was up, the buy programs were in full gear, that buying this box was technically a little bit of a retrace, so you weren't really buying the thrust part of it. And there was really very, very little risk because here's the thing, even if you got stopped out, you could always re-enter on a midband pullback, yes? The only other pause you really had in this entire move, other than this yellow bar probe to the midband right there, is this little pause right here, where it did the same thing. This is one of those rare cases where markets just break out, they run, and they hardly ever look back. You hardly get any retraces. There were really no big dips back into the midband to allow you to get in the first like half an hour. And it's so hard especially after this thrust right here, to pull the trigger, because now you're at the thrust. You know, this is the thrust, which is a no-no. So we're not buying up here. And all the way up, you're like, I shouldn't be buying. I shouldn't be buying. I shouldn't be buying. It's still thrusting. I need a pullback. And then it gives you this little dinky pullback, which at the time, if you were trading this, was probably like, oh man, I'm waiting for it to get down here, right? And it never did it until it did it up here. So you get another entry right here. And that turned into be a beautiful trade too, because it ran all the way up another, what was that, another 60 ticks? Yeah. I remember this. I took these. You remember these in the room, anybody? You remember Tuesday morning? You remember these trades? I do. I took them. Now, let me ask you this question. When you got a move like this, and you get this pullback right here. Is this load the boat time, yes or no? Load the bar, I'm sorry, some of you might be like, what's load the boat? What does that mean? Multiple contracts. Are you doing multiple contracts or not? Yes. This is a load the boat time. This is packing for bear. In fact, you could even make the case that these boxes here were load the bear time because this thing is running and there is no stopping it. You don't see days like this very often. Go back and look at your... Oh, I don't think I have it here. Tell you what you do. Just for the heck of it when you have a chance. Go back and look at a 1440-minute chart. Go and pull a 1440-minute chart up, and you go back and look at the size of these candles on these days, and you go back in a month and count how many candles you had that size. I'd challenge you to find one or two. So 21 trading days, generally 21 trading days in a month, and we're saying days like this, you get one or two, three tops. One in a week if you're lucky. Just huge. It's huge. Which oval here, Peter? Excuse me. Oh, did I stop out and re-enter? I can't remember. I normally, for runs like this, I keep my stops behind the runner stops behind the midband. But I'm sure I was calling out stops up in here, and the stops generally follow this sort of outer band line right here. So it's quite possibly you could have stopped out right there on one of these bars right here. And then yes, you would have entered either here, or you got another sort of little pullback here just above the midband, second shot to kind of get in right there. And you could actually even make the case, this thing was so strong it didn't get back to midband, there was a tertiary entry right there. See that? All right, let's move on. Okay, you see that, Peter? All right, let's go on and move on to Wednesday. So you could make the case that Tuesday was the complete opposite of Monday, right? I mean, just the complete opposite of Monday. All right, here's 6:30 on Wednesday morning. Look like this. So what do we think about this? What's the first thing we do when we get up? Tomorrow morning, you get up, you're in that little bit of a pre-market session, you're getting ready to log in the live room, charts are all loading up. What's the first thing we do? Number one. You know what they say, repetition helps the mind grow stronger. The more you hear and see something, your mind is like a muscle. It needs to be exercised. You got to exercise your brain. That's how you remember things. That's how you know what to do when you see certain things, right? It's all memory. It's muscle memory. Tomorrow morning you get up, what are you going to do? Draw lines. Good. Every single one of you gets a gold star. Good, good, good. Draw lines. And where are we going to put them? Right here. At the bottom of the range. And don't worry, some of you are perfectionists. You have to put it right at the exact spot. Well, markets are messy. They don't, you put it where the preponderance of candles are. Some are going to be a little higher, some are going to be a little lower. And at the top, of course, you're going to put it right up in here. Resistance is more or less up in here. So just kind of, here it hit it, here it went a little above it, here it's kind of right under it, right under a little bit. Same with this. So this essentially is the range. Now, if you're trading this range and looking to get in this market, is the trend up? Are you buying? Is the trend down and you're shorting? What kinds of trades are we looking for going into the open on this particular day? Here's your support. Are we buying? And here's resistance up here. Are we selling? Wednesday morning. What are we doing? There's your range. You drew your lines. You know ahead of time this is what's going on. No bias. I like that. No bias. Good. You're right at the open. You know, technically speaking, you could trade either way. However, in this particular case, I'd say you're coming off a pretty strong uptrend. The background is still green. You could argue you're still kind of getting, you know, it's almost like the market is really consolidating after a big run up. And so if you did have a bias here at all, it would be to the upside. Now, 631 Band-Aid would be painting, it would either be painting, I don't know, let me see where 632, 638. Okay, here's what I'm going to have to do. Let me show you where 631 would have painted exactly. Now, 631 and 632 would have been painting somewhere right in here. I can't have an exact time because the way this chart is. And then it does this. So when it does this, what do we think? What are we thinking now? Carl, my inclination, and it was my inclination on Wednesday morning when I traded YM in this condition, was to buy support, and I'm looking for trend continuation up to the upside, simply because we're coming off that huge run from Tuesday. We're consolidating at this upper level. I'm more or less kind of thinking, I have no bias, technically speaking, and the no bias really comes more into play when you're in a range, and you don't. In this case here, I would have boxed this with allowing it to go to the upside. In fact, I think I did. So this would have been your condition here. This would have been a box here, 631, 632, 633 is actually right here. So you would have just come down at 630 to the bottom of the range, bounced, paused at the midband, and with the bias, you know, if you had the bias to the upside, even if you didn't, you were filled long right here. So you never got a short. And then you popped up, pulls back just a little bit here, checks that uppermost band, and then she just takes off like a bullet one more time. See that? That was the next 40 minutes. So looking at this chart, when you have so much momentum to the upside and the buy programs are so strong, you're almost sometimes not going to get retracements all the way back to the midband. You're just not going to get that opportunity. Because why do markets go up like this? Why would this market and all the equity markets run up like this? What's causing them to do that? Anybody? Why are they doing that? Any ideas? Why are they doing that? Good. I have to say, I looked away for a second, and I am quite frankly a little blown away. Good. Buy programs. That's exactly what this is. It's all algorithms. All of the buy programs are working together. They're all saying buy, 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 and they're buying and they're buying and they're doing more buying and they're doing more buying and more buying and more buying. What do you think is happening when the market looks like this? Right here. When you get these ranges like this, what's going on here? Is it just confused? Is the market confused? In collusion. Well, I'll tell you what, there are times, there are conditions, certain conditions where markets, algos, all the algos start working together. And that's why you get those powerful rallies like that. That's all programmatic trading. That's not discretionary traders around the world. That's programmatic trading. Buy programs on a tear, unrelenting. Yeah, the programs are fighting each other in here. Buy programs are trying to push it up. Sell programs are trying to push it down. That's all this is. You know, most of you know, of course, is 75, 80+% of the trading done in these markets is all computers, right? Yeah, it's all computers. So, you know, that's what's happening here. When you get these ranges, the programs are fighting each other. You know, the shorties want to take this down. They want to come out of this consolidation. They want to short it, and they want to start getting a powerful downtrend, right? Buy programs are kicking in, and they're buying the support. They're supporting this area, and they want to push it higher. And every time they get up here, sell programs push it right back down to the bottom, and that's why you get this indecision. That's exactly what that is. That's exactly what that is. Stand by 1 second, please. So our job as traders, if you think about it, with our interpretation in our lines, in our background colors and the bars and the mid band, all the bands, essentially we are using our software to make discretionary decisions about entries in interpreting what the programs are doing. Yes, that's essentially what we're doing, right? We're like the little guppy fish on the back of the big whale. Big whale has the big programs and the algos running, and we're figuring out what it's doing, and we're going to ride right along with it. Okay, good, perfect. Excuse me, pardon me. Hold on, I got this little tickle in my throat. You know where it started was over the weekend. I got this like cough, and then it kind of turned into a head cold, and I've been fighting it ever since. Ride the coattails, that's right. As long as the buy programs are kicking in and the trend is up and it's clear to us, we're looking for entries, right? We're just looking for entries. A little bit of retrace here and there. Pull back to the mid-band, retrace. Now let me advance the chart a little bit more. Here we peak out right around 720 at this swing. By the way, let me just ask another question. Let's say that you missed this entry right here. Everybody see my cursor? You didn't get that one, and you know what? You missed this one, and here it is about 645. You see a little pullback here. It's holding this swing level. You decide to box it in, or you use one of your line or ray tools, somehow market order, however you decide you get in. And you get in with a couple, and you scalp one, and you're trailing your stop up, trailing your stop, and you keep your stops tight, and sure enough, it takes you out right there. So you got a pop and a run. And we're here at 725, almost 730. And you're over your goal. Should you keep trading? I don't know. Let's see, this last runner went from 85, 90 up to 60. So I don't know, 400 on the runner, and maybe you got 50 on the pop, so you're probably around 500 bucks, plus or minus 50 bucks. Go into sim. See, who was saying that, waiting for the good entry? Was that you, Kenneth? Several of you had mentioned, I'm waiting for the good entry. Well, this is your entries right here. Here's your entries right there. I mean, your entries are right there. And you got beautiful runs. You're less than an hour into trading. You've made 500 bucks, plus or minus. Don't give it all back. You're done. Go into sim. How many people do you hear in the room every morning within the first 30 to 50, 60 minutes say, I'm done? It happened this morning. There was a whole bunch of people. I'm done. Thanks, guys. See you tomorrow. That's what you want. You want to be patient. You want to pull the trigger. Take 1 or 2 trades in the first hour, and you are done. This is another load the bear day, by the way. We're running here, right? We're running. Now, let's look at what happens after about 727, 730. Here we pull back. You get one more bounce. It's trying to get back to the top. One more bounce. It's fighting the mid-band. It's trying to get back up. Just breaks the top of that swing by about, I don't know, I'm guessing that's about 5 ticks. So who had the question on the Band-Aids and managing the Band-Aid? I can't remember who that was. Well, obviously you see this is a Band-Aid right here with the bias to the upside. If you were still trading, David D, that was you? Well, here was a mid-band. You would not have been wicked in short. By this point here, everybody knows it's an uptrend and we're buying only by this point. You know, the no directional bias thing really comes into if you're getting big swings like on a, you know, on a what's that news day? Non-farm payroll, and you get the big roller coaster up and down. That really helps on those days because then you can take advantage of both directional swings. But here, clearly, you're heading up. So here's your Band-Aid. You get one sort of last gasp. If you didn't make all your money on that big run, this was certainly a chance to make more coin. You could have loaded the boat up and made good, very good coin right there. Let's move on before I run out of time. I'm right here. I'm actually just a little bit over time, but we got a late start. So before I do, I want to show something. This is typically what happens after these big moves. Here was your big move on the left. Here we're getting long in the tooth. Here you're at 8 o'clock. Here you're at 8:30. Where's my cursor? Here's 8 o'clock right here. Was that last gasp up here? Here's 8:10. Here's 8:30. Here's 9 o'clock. What's happening in here? What's happening right in here between 7:38 and over here to 9 o'clock? What's the market doing? Is that trend continuation? Is that buy programs all working together? What do you think? Choppy, range bound. It's consolidating. It's absorbing the fact that it's run all the way up here. Yes? I mean, with the exception of this little poke up here, where it pokes its head through the top by about 5 ticks, you're pretty much in this range, yes? So you're back into the range trading. I can't tell you, and I don't do this anymore, but here's another example. So two of the places that you could can be prone to whack-a-moleage, if you want to even really call it that. Right here at the open. Some of you I know still get whack-a-mole around a little bit here right at the open, okay? Sometimes some of you want to wait a little bit, and sometimes that helps, and sometimes it hurts. You normally get a trade between 6:40, 6:45, 7 o'clock, all the way here, 7:30. Here's 8 o'clock right here. Now here's after 8 o'clock is all this. Consolidation, choppy, not trending markets. So these are well, that's why at the end of every session, if you ever hear, I always almost every day say something to the effect of, try not to overtrade, bank your coin, don't give it all back. It's because in this circle over here, and in this rectangle to the right after 8 o'clock are areas where you can tend to get your chop, you keep overtrading, and then you pour it all right back into the market and lose your 500 bucks. Okay, that's why we have the room open when we do. We open at 6 o'clock for Gary trading that pit oil open for all the oil traders. 6:30, of course, I come in and we trade the equities and oil, and we wrap it up around 8. We used to go to 8:30, but we found between 8 and 8:30, that last half an hour sometimes winds up looking a lot like this. And what it did when you stay open too long is you almost sort of encourage over trading because you're going into that choppy session, and all the good money you made over here gets poured right back into the market right there. Is anybody still doing that? We've said that stay green thing probably 2,000 times in the past 8 years, so hopefully nobody is doing that, right? Really pick your spots, be careful, lock down your coin. That's how you become a long-term successful trader. All right, no questions on this. Let's go ahead and move on to what happened this morning, and then we will wrap. Excuse me. Let's come over to today's open and see what she looked like. Stand by. I'm going to clean the chart off. Give me 1 second, please. Okay, here we go. Let me get 6:30 teed up for you. Okay, here's 6:30 on, today's the 26th, right? Thursday the 26th. Where the heck is 6:30? Give me 1 second, please. Try to get this scuffle over here to the 6:30 mark. There we go. Let me blow this up a little bit. 631. There's 633. All right. So what's the first thing we do when we come into the market? What's the first thing we do? I know I've asked this 3 times. We all should know. We all should just do it, right? I'm going to keep saying it until we all do it. Draw lines. Good. We draw the lines. And so the lines, most of you know, I'm just going to put them up here. We know resistance is up here. We see a support level. You can make the case kind of right at the mid-band in there. And of course, we have another swing right here. Right? No bias, unless you're in a powerful uptrend, and like we did on Tuesday and Wednesday, where it's clear to us that the market's continuing up, and we're looking for long trades on pullbacks, which we got on those 2 days, and boxes. So as long as it stays within your lines, we are said to be, yes, range bound. Now, is this upper range tradable? Right up in here. The one that's set up just above the midband. Is this tradable, yes or no, up here? Where I have circling my cursor going into the open of the market. On YM, was this tradable, yes or no? Support down here, midband's located right around 840-ish. And your resistance up here, 50, 55, 60. A little too tight, huh? I'm not going to, since I'm kind of running out of time, most of you, if you've seen in my other webinars, I explain that in detail. Excuse me, pardon me, let me take another quick sip of tea. Hold on 1 second, please. Sorry about that. Fighting this cold off. I'm going to take some meds over the weekend and nuke this thing back. And yeah, so you have to fade the top and you have to fade the bottom. Couple of 4 or 5 ticks, and there's no meat in here, right? There's just, by the time you get in, you're getting out. By the time you're getting out, you're getting in, and plus slippage and commission, there's just no meat. When you're under 20, you have 15 tick range, 10, 12, 15 tick range, it's just not tradable. This is really not tradable. Market's going to have to come out of this range and do something for us to look for trade entries, yes? That's basically what we're saying when it's too tight like that. You just have to wait. All right, let me advance the chart. Ready? Here we go. I'm going to advance it. Okay, now here's 630, 633, 637. We're coming up on 7 o'clock. I can't recall if there was news. There was news today, right? Pending home sales, core durable goods. So in the pre-market there was some news. Wait a minute. What's happening right here? Wait. Hold on. Stand down, Big Joe. What's going on with the bus? What happened here? You got a little swing, and then she pops up. And then what is going on right here? What is this? What are we looking for now? Are we looking for longs? Let me advance a little bit more. Okay, what about now? Here, let me advance it a little bit more. What about now? What's happening now? Let me help you. What's happening here? Anybody? What's going on? Trend has changed to down. We're looking for shorts. Good. Who said that? Lost in Axle. Came off the rails. Carl G. David D. Peter. Trend change. Looking for shorts. Kenneth. Good. Carl. Peter. Lower highs and lower lows. We're looking to short. We're shorting retracements. Here you got a couple shots at it right here. It came up close to the mid-band, rolled over, fresh swing low, yes? I remember this reversed. We were in this range. We started to roll over and head down, and now we're taking shorts off of rollovers, yes? Everybody see that? Comes up, tags the mid-band again. Now, who had the question? Diane, was that you? Somebody had a question about comes out and goes back in the band. Who had the band coming in and out of the band question? Anybody remember? Diane, I think that was you. I don't know. She should still be in here. Maybe she left. Right. This would have been a case where that would have happened. Okay, where you know you got in, maybe you got a little scalper here, and then it came up and really checked the mid band right here, like this. Now let me explain this in how you could have approached this and what could have happened. There could have been a couple of different scenarios on how this played out. And it really is a function of how you had your OT set up. One scenario could have been like such. You had a box here. You got filled short on that bar. If you got the scalper and you do the what do you call it? Where it flips and goes 2 ticks behind your entry. If you got the scalper and you come 2 ticks behind the entry, then your stop would have immediately come to here and you would have stopped out. In that case, you had a chance to rebox it here and then go ahead and take another short right in here, and you had a second trade that played out. Okay, and then it came back, gave you a scalper to the bottom of the range, and then continued to come up and check that midband. So there could have been several scenarios where it came down and then back in your box. Now, in a case where we're heading down like this, the background is red. Our bias is down now. Okay, we're at 7 o'clock. News has come out. You can have a bias, and it's down. Trend is down, and we're shorting, right? So there may have been several scenarios where you got in and out of the box, where it comes down, takes the short, hits support. And depending on your triggers of your 2-tick break-even deal from the 12, you could actually stopped out once, maybe twice. Well, no, it's hard. Yeah, it's hard to say on the second one, and then the third one you didn't because it just broke and then took support out, came back up. So essentially, by this point here, by the second or third trade, you're pretty much realizing that you got to be scalping support here. Okay, you can see by this point you're not really getting the runners just yet. It's still in a range for the better part of 45 minutes. It's range bound to the downside, Kenneth. Exactly. That's exactly what that is. So you would have to make some adjustments to your targets. So if you normally have bigger F to get your 8-tick scalper, and you're accustomed to having 20+ tick runners on a runner day, you got to toggle that down and set it to 6 or 8 ticks and just go for 1 or 2 contracts and scalp right in here if you're going to continue to trade this. But yeah, this would have been several scenarios where it came in, and these little wicks here would not have gotten you long because you're short only, right? See these little wicks coming up? You're not getting long here. It's not getting you long. It's rolling over and filling you short. Okay, listen, I'm going to go ahead and wrap. We ran a little over because we got a late start, but we're good to go.